Hi everyone, welcome to my channel. In this video, I'm going to reveal my entire portfolio. So I do a monthly reveal of my portfolio, and at the time of this recording, it is August 2026, and I have my stocks in three different portfolios. So I have my individual brokerage, the second one is my Roth IRA, and the third one is HSA, health saving account, where I myself manage and buy different stocks. So I'll be revealing all my portfolio. Everything is raw. I'm going to show you my brokerage, and you'll have all the details of at what price I have bought these stocks. So before we go into my individual stocks, I want to show you my performance. So I started investing from November 2021, and I'm showing you my performance, which is a consolidated account versus the S&P. That is my benchmark. And let's look how I have done compared to the SPY. SPY is the S&P 500 index. So year to date, I'm matching with the index. And if you look over a 1 year period, I'm almost double to the SPY. And again, over a 3 year period, I'm 88% up, while S&P is 72% up. But if you look at since inception, I'm almost doubling that. Let's look at annualized return. So over the period of time since I started investing, I am doing almost 23% CAGR, while SPY in that same period has done almost 12%. So let me start with my individual brokerage. So in this, I have a total net worth of 30,000. And from inception, as you can see, I am 164% up, and this purple is comparing my portfolio against the S&P 500, and you can see I'm beating S&P all across. Now let's go to the positions that I hold. So we click here, and now we are back to the different positions that I have in my portfolio. So as you can see, there are different stock options in this portfolio as well as individual stocks. So all of these are leap contracts and they are call option. So I try and keep things simple when it comes to option trading, and it's not always that I do option trading. So whenever I see there's a good value in a growth company that has been beaten down by the market because of some certain reason which I may not agree to, and if the stock is really lucrative, at that point I jump in and buy a leap contract. Whenever I buy these leap contracts, I want to have a maximum length of the time, so 2 years, 1.5 year at least, and then I go deep in the money. So if you understand option, you would know this. I do deep in the money, like 80, above 80 delta. So all the leap option that I have are actually 90 delta and above. So let me start with the Adobe. So as you can see here, I'm already up like 4,600 in this Adobe leap contract. And you might be wondering how this has happened. Although Adobe has fallen down and beaten by the market, so I bought this contract when the stock price of Adobe was $196. That day I was like, this is really cheap and let me jump in. So I paid for one contract $9,907, and this contract expires in January 2028. So I still have like 1.5 years, and because from that day the stock of Adobe kept up, it jumped up. Right now it's trading at around $256 somewhere, and because this stock moved up like 20%, and it's a leap contract at 90 delta, this Adobe contract is 48% up, and that's how I'm making here $4,600. Now let's go to my next option contract. This is again a leap option. So this one also expires in January 2028, and this is a Pindua Dua leap contract. So I have two contracts of Pinduoduo, $50 strike price, and this has enough time to see how this fluctuates and behaves. So I again bought this at 90 delta, and since then, so I bought this almost like 2 months back when the stock price of Pinduoduo was around $77. Right now this has jumped to like $89-$90, and that's why you see $1,190 gain on this. And I also own Pinduoduo shares. So this share, 13 shares of Pinduoduo, my average price is $119, and I had bought this like 1.5 years back, and I was holding it, looking at how the market is doing on this, and I feel like Pinduoduo is really undervalued. It's trading at around 5 times the free cash flow, and they have almost 70 billion in cash. So I'm like, if Lilu, a value investor, so you might know this, and there's a value investor named Lilu, and he has been in this stock, so I trust him, and I myself look at Timu and all other products they have. It looks like a good value to me, so that's why I have this leap option contract. And the next stock I have is C Limited. So C Limited is a Singapore based company. It's a e-commerce company, and I have 20 shares of this again I bought like 1.5 months back, and this has moved like 7%. I have another call option on Kaspi. So Kaspi, for the people who do not know this, it's a Kazakhstan based company. So it's the biggest company in the country have like 10 million population, and this company alone is around 8 to 9 billion market cap, and they are similar to WeChat. So if you know Tencent, WeChat, they have similar kind of a technology based business, and they have banks, e-commerce, payment, a lot of things within the same ecosystem, and this is the biggest company in the country. Recently, they plan to expand their same business model to Turkey, and they cut up dividend. So they were paying like 10% dividend on this Kaspi, and then they cut the dividend to almost zero for like 17 months, and market didn't like it, so it sliced to almost 50% valuation. And at the time when I bought this was $90, so nothing has moved, but we'll see how this one goes. And I'm also selling a call on Kaspi. So what I have done is, as you can see, I bought 65 strike price call option that expires on December, but I'm selling a covered call. Some people also call a poor man's covered call, and this expires on September 18, and this I'm selling at 100 strike price, and for that I collected premium of $253. So if this Kaspi goes above $100, right now it's at 93, I will close this leap contract, both the call and the covered call option on this. So the next one I own is Futu. So this company, Futu, is a Chinese based company, and they own an app called Momo. So Momo is similar to Webull, and this is a trading platform. I like this company's valuation, and that's why I have 11 shares of this. The next one I have is KPG, which is a Kelly Partners Group. This is an Australian based company, and if you know Constellation Software, you know this Kelly Partners Group. So similar to Constellation business model, they acquire software based small companies and make a portfolio of this. So what they does is they only acquire accounting and tax related small companies, small firms, and they have a portfolio of this. Every year they buy 20, 30, 50 different small portfolios of companies, and they keep expanding it. So at the time when I bought this, I felt there's a good valuation on this. It's almost trading like 10 to 12 times free cash flow, and I checked their last 5-year free cash flow, and they are doing 15 to almost 10 to 15, 18% free cash flow. And the next one I have is CRM, Salesforce. I have here only 2 shares of Salesforce, but in my Roth IRA and a health saving account, I have more Salesforce. And in fact, a lot of these SaaS companies. So let's go to my interactive brokerage now. So this is my Roth IRA, and I started investing on this account since January 2025, and up to now I'm already 51% on this, and I have total value of 9,200 on this Roth IRA. Let's look at the individual stocks I'm owning here. So before I owned all these companies, I had this all the money in this Roth IRA in United Health, and I had bought this when there were bad news about United Health, like the CEO was assassinated, and I jumped in and bought almost like 7,000 worth of the United Health, and once it jumped to like 30%, I exited the entire position, and then I saw these SaaS software based companies were really beaten down, and I jumped in and bought a bunch of these software based companies. So I have Constellation Software like 1.5 shares. I'm up there. Then I have Salesforce 16 shares, ServiceNow 10 shares, KPG. Again, KPG is Kelly Partners Group. I also own it here. And then Pfizer. This is also at the time when I bought, it was $53 per share, and I feel like this is beaten too much. We'll see, it might recover from what it's here right now. Like, it was at one time trading at 200 and now it's trading at 53. The cash flow multiple is almost like 10 to 12 times. They have some depth, but we'll look. Then there's this HR block. I just have 0.8 shares and Intuit. So I have more shares of Intuit and CRM and other software companies in my health saving account. So let's go and visit my health saving account and the performance there. So we are here into my health saving account. So this investment is in Fidelity. It's associated with my company. And here the total worth of this portfolio is 17,400. And let's see which stocks I own in my health saving account. So for the people who do not know, if you have a health saving account, you can manage your own portfolio. In fact, you can buy your own shares and sell them at whatever time and however you want, but you cannot do option contract. That's what I understand. And for this one, I'm managing my portfolio by myself. So I buy certain stocks that you see here and sell them at whatever time and how I want. So let's visit this health saving account portfolio. So in this, again, when I saw these SaaS companies like Salesforce, Intuit, Constellation Software, ServiceNow, these were fallen down, and that's when, like 1.5 months back, I resized and restructured my portfolio and bought a lot of these SaaS companies. So I bought Salesforce, 20 shares of it, and I have my holding of like 3,700 there, and I'm already up 21% on this. Similarly, I have Intuit, almost like 5,000 here, 15 shares of it, and it's moving up. Same with the Constellation Software. So you would see Constellation Software in different portfolios. So wherever I had money, I kept adding on it. And I also have like one share here of Constellation Software. Then I own 10 Cent Music. 10 Cent Music. So it's similar to Spotify in China, And when Lilu bought this, I also jumped in and bought 10 cent. Then this is Wipro. So it's listed on Nasdaq, but it's a Indian based IT firm. And because of this AI fear, this company was also beaten down like 50% or more. And I bought like 1000 worth shares of Wipro. Then the next one you see is TAVSY. This is an airport based portfolio company in Turkey. And I followed Monish Pobray on this. And when he bought this, I saw in his portfolio and I bought a few shares of this. Then I have Uber. Then this is Uber. So Bill Ackman, when he bought Uber, I looked into it and I liked everything. There's a growth and multiple is like 15, 18 times. So I bought 1000 worth of this Uber. And the next one is Infosys. So it's again an Indian based IT company. And because of the AI fear, this is also beaten like more than 50%, and it's trading really cheap like never before, almost 12 times free cash flow. And that's why I bought like 1100 worth of Infosys. I have used almost 500 worth of Lulu. I'm down 11%. And then there's PayPal. So I bought PayPal at the average price is 60, I think, and then it fell to almost $40. It's recovering. I'm done. Now I'm planning to sell PayPal and buy more Kaspi, the one I talked the one I talk right now. It's a Kazakhstan based company. They are giving 4% dividend and there's a more growth potential. So anything that I will make a change in my portfolio other than putting extra cash and buying new shares, it will be selling PayPal and buying back the Kaspi shares. So in this portfolio, I am doing like almost 14% this year, and these are different holdings I have. You could see I have a lot of software based companies, and only reason is because I feel there's a excessive AI fear, and quality companies like Adobe, Constellation Software, these are not going anywhere, and that's where I'm betting heavily, and I am doing well so far. So again, this is not an investment advice. Do your due diligence before you buy anything, and next month in September I'll again update my portfolio. This is all for now. Thank you.